Copper has been an essential material to man since as far back as 8000 BC, and due to its natural, usable, metallic form, early civilizations used it to make jewelry, sculptures, tools, and other metals such as bronze, which is a combination of tin and copper. The ability to resist corrosion ensured that copper maintained functional and decorative use from the prehistoric era to the successive centuries through the Industrial Revolution and on to the present day. In the modern age, copper's versatility has expanded further, and it's become the material of choice for electrical connectors due to its cost-effectiveness and conductive superiority. Copper is the third most consumed metal in the world, and 3/4 of its consumption goes towards electronics. It's used to make products such as microwaves, electronic connectors, circuit wirings, computer chips, and semiconductors that companies like IBM and Intel manufacture. Over the past few years, we've seen an increasing amount of global climate activism due to the detrimental effects of climate change throughout the globe. This has prompted urgency within the international community to launch joint initiatives to combat climate change, most notably the net zero emission targets. More than 130 countries have pledged to reach net zero emissions by 2050 or soon after. This led to aggressive and immediate regulation against fossil fuels, which has in turn fueled a lack of investment in infrastructure over the past few years, one of the reasons we're seeing shortages in many traditional commodities today. Due to stricter regulation on the use of fossil fuels, renewable technology that will replace legacy fossil fuel tech needs to be scaled at a much faster rate, and copper plays a key role in achieving this goal. On average, 5 times more copper must be used to build renewable energy systems versus traditional power systems. These global climate initiatives, combined with a stagnating copper supply, is likely to lead to a massive long-term supply-demand imbalance, putting the entire renewables revolution at risk. In this video, we'll dive into the mechanics of both the supply side and the demand side to figure out why we're likely to see equilibrium copper prices rise substantially over this decade. Energy is the largest emitter of carbon globally, and with the electrification of transport and the growing computing demands of AI, global energy consumption is expected to rise 26% more over the next 30 years. This will require massive growth in renewable energy capacity, driven by 3 main demand factors: electric vehicles, wind energy, and solar energy. Let's take a closer look at each. One of the 3 major drivers of green copper demand in the coming decade is electric vehicles. Copper is used all throughout EVs, from the battery to the cables to the motor, along with the charging station that powers it. The standard copper content of an EV is on average 60 to 83 kilograms per car, which is 4 times larger than that of a traditional ICE vehicle. EVs are unique in that they are the single source of demand that's driven based on consumer preference and adoption trends, rather than the long-run infrastructure-type investments needed to scale wind and solar. EV demand has grown exponentially over the last decade as battery technology has improved. In 2015, only 0.65% of all new vehicles sold in the US were EVs. Today, that has risen to just over 3.5% of all new vehicles sold. Despite this rapid growth, the electric vehicle industry is still in the early stages, and demand is expected to grow even quicker, from 3 million cars today to an estimated 65 million annually by 2040. Additional EV demand for copper lies within the charging station. While the charger itself doesn't have much copper in it, the wires used to connect the charger to the electrical panel, as well as the charging cable itself, use copper. By 2030, estimates predict that there will be over 20 million EV charging points globally, consuming 250% more copper than in 2019. Demand from charging stations is expected to reach 153 kilotons by 2030, compared to just 14 kilotons today. The acceleration in demand is also being driven by increasingly supportive regulation in both Europe and China through EV incentives such as subsidies. President Biden has also committed to transitioning the federal vehicle fleet to EVs, signaling a shift in US policy towards the sector. The Biden administration is also committing to EV charging investment by aiming to build a national charging network of 500,000 chargers, along with a goal of increasing EV sales to 50% of all cars sold in the US by 2030. Due to all of these aforementioned tailwinds, total copper demand from EVs is expected to grow from 500,000 tons in 2021 to nearly 2 million tons by 2030. Advances in wind energy technology have decreased the cost of producing electricity from wind, and government incentives in the US and globally have supported demand growth. Wind electricity has risen from nearly 0% of power generation in the 90s to 8.4% of US power generation in 2020. Copper is an important conductor in wind power generation, and it's used in cable and wiring, tubing, generators, and transformers. Wind farms can contain several 100,000 feet of copper, weighing between 4 million to 15 million pounds. Copper usage intensity is high because turbines in onshore wind generation farms are spread over large areas of land, which requires a large amount of copper cabling. In the offshore environment, copper intensity is 2 to 3 times higher due to the ultra-high voltage cables needed to transport the power over significant distances back on shore. The closest alternative to copper would be aluminum, which is lighter and cheaper. Although it requires more maintenance and the cables would need to cover a much larger surface area than copper cables to achieve similar levels of electrical resistivity and conductivity, and therefore it isn't really a viable alternative. Wind power capacity is expected to rise thanks to government support around the world, and demand for these offshore projects is only set to grow, with the European Commission publishing their EU Strategy on Offshore Renewable Energy report, with a 2030 objective of 60 gigawatts of installed offshore capacity compared to 12 gigawatts today. In December 2020, US Congress extended credits on wind and solar power with the Consolidated Appropriations Act, while China's 2060 renewables goal translates to a $16 trillion investment opportunity over the next 40 years. Of the total investment, $2 trillion will go into onshore installations and $0.7 trillion for offshore projects. Therefore, wind-related copper demand is expected to reach 1.3 million tons per year by 2030, growing at a rate of 12.4% annually. Solar power has a key role to play in decarbonizing the global economy. Technological improvements have led to falling production costs, and prices have gone down as much as 70% since 2010. Financial incentives such as tax credits and rebates are also supporting demand. In the US, you can claim 26% off federal taxes for solar power installations. In Europe, incentives range from a 30% investment subsidy for rooftop and building installations in Austria to the Netherlands, which allows entrepreneurs to deduct 44% of the investment costs of solar equipment from the fiscal profits of the company. Solar power remains the powerhouse of growth in renewable electricity, led by China, which has tripled its solar capacity since 2016. Copper is an essential element in solar PV technologies due to its high conductivity and cost effectiveness, giving it a higher conductivity per dollar than silver or gold, which is critical to maximizing the conversion ratio of photovoltaic to electrical energy. Additionally, copper's durability is crucial for a technology like solar, that has an average life cycle of 25 to 30 years. Solar generation capacity worldwide is estimated to triple between 2020 and 2030, and then triple again by 2050. Around half of increased capacity will be installed in mature markets in the Asia-Pacific region, with the lion's share of this demand coming from China. Copper demand from solar energy is expected to reach 1.8 million tons annually by 2050, and combined copper demand from solar and wind could surpass 3 million tons annually by 2050. The green transition will drive exponential growth in copper usage over the course of this decade. However, there are already sizable market deficits expected even before these green trends start to influence the balance. There is expected to be a market deficit in both 2021 and in 2022 due to robust cyclical demand combined with supply that has been restrained due to the pandemic. The impact of these deficits would reduce market inventories to the lowest level since the mid-2000s. There isn't a physical shortage of copper, rather, the shortage comes from the mining sector's focus on deleveraging and being conservative with undertaking new investments after the 2014-15 metals price collapse, which came after a surge in supply following the copper price rally in 2010. Of the 224 copper deposits discovered since 1990, only 7% of them were discovered in the past 10 years. There has been no indication of a pivot towards new investment from the mining sector, despite the stronger copper price environment. Given that copper projects take 2 to 4 years for brownfield additions at existing mines and 6 to 8 years for new greenfield projects, new investment in mine projects has to begin immediately. The copper industry needs to spend upward of $100 billion to close what could be an annual supply deficit of 4.7 million metric tons by 2030. That's the equivalent of building 4 projects that are the size of the world's largest copper mine, which is not achievable with the current state of CapEx investment. Price is ultimately the result that adjusts to these supply-demand mechanics. The immediate conclusion from the dynamics outlined is that current copper prices are too low to prevent a risk of inventory depletion, while current long-term prices are not high enough to incentivize the undertaking of new greenfield projects to solve the long-term gap. If copper prices remain at current levels throughout the next 3 years, then the resulting deficits would generate a depletion of market inventories by early 2023. In 2021, copper price tried to break out to new highs not seen since 2011, but price has since retreated slightly and is now consolidating near local highs. China has been trying to stop copper prices from rising further by selling state metal reserves, stating that high raw material prices hurt small and medium businesses. The first state auction of copper reserves in early July of 2021 did manage to cool off copper prices. The second state auction had less of an effect in curbing prices, and the third time they tried to act as a price ceiling, copper prices actually went up, signaling that the broader imbalance between demand and supply is becoming drastic enough to ignore attempts at price controls. In order to avoid the risk of the depletion of copper inventory, copper prices are expected to trend from 10,000 today to the mid-teens by mid-decade, representing more than 50% price appreciation opportunity in the next 3 years. Whether prices need to rise further after 2025 will depend on whether the magnitude of price increases catalyzes enough new mine supply to emerge by that stage in time. If current trends don't change, copper prices are very much likely to be driven higher, as the copper market faces inventory levels near depletion in the short term, as well as a shortage of new mine investment to solve the expanding shortage over the long term.